With the ceasefire of Iran and the sudden pump in Bitcoin's price, is it time to buy the Misty dip? Let's find out. So, should you be buying the dip? Absolutely not. And that is not because Misty is a bad investment. Misty can be a great investment, but in this video, we're going to understand why and how you should be thinking about your Misty investment in order to avoid getting burnt. Remember, Misty is driven by Bitcoin. Bitcoin is related to strategy, and strategy is related to Misty. Bitcoin, MicroStrategy, and Misty are interlinked. So let's reset our baseline and understand how. So, Misty is driven by MicroStrategy, which is driven by Bitcoin. Now, we know that Bitcoin's price, if we think about it, if Bitcoin's price goes up, our P&L, our profit and loss goes up. And if Bitcoin's price goes down, our P&L goes down or negative. And we know that MicroStrategy, or strategy B, is a leveraged play on Bitcoin. So when Bitcoin's price goes up, MicroStrategy goes up more. And when Bitcoin's price goes down, MicroStrategy's price goes down more. And so these two are directly related. Now, Misty is a little bit different. And I've tried to talk about this in more detail in a lot of my earlier videos, but we're going to go through it again because I think it's really interesting. Now, Misty is a covered call option strategy on MicroStrategy, right? So it still has this relationship baked in, but what it does is something a little bit interesting. What it does is it sells this upside movement in MicroStrategy. It says, hey, if the price goes up, I'm willing to sell my MicroStrategy in exchange for the option premium. Now, this option premium is the fat, juicy 80% dividend yield that you see when you look at MicroStrategy. However, there comes this one big problem. You're still exposed to the full downside of MicroStrategy. So when the price of Bitcoin goes down and the price of MicroStrategy goes down more, you are fully exposed to that MicroStrategy price without any recovery option premium or a recovery option because you've sold it in the form of a call option. And that is how Misty works. And that is what makes it such a complex product. But what's interesting is that you don't have to believe me. I can show you this price action occurring in the charts. All right, so if you don't believe me, we can see it really clearly in the price action. What we have here is a chart of Misty's price action since it was established in Feb 2024 versus MicroStrategy's price here in black, Bitcoin's price here in orange, Bitcoin orange, and Winter's price here in blue, the inverse product of Misty. So what we can see is when Bitcoin goes up, MicroStrategy goes up much more, right? We have a bigger change. We can see it and we can measure it. We can say, hey, look, between this period and this period, Bitcoin went up 60%, but we can do the same and we can compare it to MicroStrategy over that same period and it went up 93%, right? It's a leveraged play on Bitcoin. It goes up more than what Bitcoin does. And what we can see in that same period here, if we compare it to Misty, is that while MicroStrategy went up 93%, Misty went up 34%, you know? So that is because it's not selling all the upside, but it's selling a large portion of that upside, about 2/3 of it. And that is why Misty doesn't maintain its price, but it's fully exposed to the downside. If we look at this downside here over that same period, Bitcoin has obviously gone down around 48%, right? Well, 48%. And at the same time, MicroStrategy has gone down 76, 77%, right? So what has Misty done? Misty has gone down 82%, almost the exact same. It's fully exposed to that downside of MicroStrategy. Upon that review, we can see that MicroStrategy goes up more than Bitcoin and goes down more than Bitcoin, and Misty goes down just as much as MicroStrategy will, but it only goes up a very, very small proportion because it sells the majority of this upside, about 60 to 70% of it, in return for your fancy option premium that you enjoy in your dividend. Now, what's the implication of this? The implication of Misty's price action and the implication of always having sold your upside is that Misty generally always just goes down. And we can see this. We can see it in the price action. This is Misty zoomed in. Now, the interesting thing that you'll note is that it's saying that Misty's price issued at $100. And we know that it didn't. Why? Because they had a reverse split, which brought up the price by reducing the amount of shares. And what have we had? We've had price go up shortly, but then as soon as Bitcoin flattens off, it goes down. And then it's had up when we've had extreme upside. That was the peak of the bull market. But as soon as there's not insane amounts of upside, but Misty has just gone down along with the price with time. Why? Because all these times it's just issuing out dividends. Every couple of weeks, it just down, 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 down. These are just the dividends being issued while not being exposed to that upside. And so the price action of Misty is that you always go down. And so what's the implication? No, there's no such thing as buying the Misty dipped. The Misty is not a growth product. It does not recover from price going down. You need to trade it. It needs to be actively managed. You want to be in it when price is strong and favorable, when it's flat or going up. But as soon as it goes down, that loss is generally permanently locked in. And this is a feature of covered call strategies. This is not like exclusive to Misty. I can show you some other ones. I'm going to do that now. Here is QQY. QQY is a covered call strategy applied to the NASDAQ 100 index. And what we can see is that it always just goes down unless there is some sort of incredibly strong market movements upwards. It's basically accumulating dividend, releasing it, accumulating dividend, releasing it. Now, if that accumulation period is only dividend and there's no capital gains, it just goes straight down to where it started. You can see that here. And if there's not enough gain or the market's flat or going down, you can see that accumulation is not enough to pay for the dividend that comes out. And then it just keeps going down, 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 down. And that is the typical price action of a covered call strategy, is that you will eventually just burn through your principal. And so you need to have approach to actively manage it. The beauty of Misty is that there is an approach. This is the Mangosteen approach to actively managing your Misty winter approach. Now, the beauty of Misty is that there is an inverse winter, and that inverse gains value when Misty is losing value because it is the opposite of Misty. It takes a short covered call approach or covered put approach or whatever. And when Misty is going down, winter is going up. And when winter is going down, Misty is maintaining or going up itself. So you can see here, winter is going down while Misty in the green is going up. And that becomes really powerful. And what we can do is, if we understand that this is fully and directly linked to MicroStrategy, is that we can place this approach on the MicroStrategy price action, which is this bars here. And we can see price going down. So we want to be holding winter. Or we can see price going up like here, and we want to be in Misty. And that way, what we do is we hold our principal investment, generate the fancy dividend income that we want to generate while avoiding these massive losses in capital when price is going down, because we're in the correct asset, right? Between July 2025 and present day, you basically needed to be in winter. And what have we seen in that period? We've seen a generally stable price for winter. You've wanted to be generally in winter. But Misty in this period has gone down substantially, and it's become a really, really unappealing thing to own. And that's why everyone feels really burnt. And so, as I say, the trick to Misty in winter is to recognize that they are an actively managed product, and you need to actively manage between the two if you want to avoid permanent principal loss. So, who am I? I'm Mangosteen. I have an academic background in finance, economics, accounting, and engineering. I have broad experience across corporate strategy and finance, including time as head of investment and treasury for a multi-billion-dollar corporate. And my purpose is to cultivate the next generation of active investors, from suits to steel caps, through renegade financial education and strategy. If you're interested in the Mangosteen tools, Mangosteen Private is the way to access them. I currently am providing a 2-year license, which is essentially a 50% discount on the current price, because it will eventually move to a 1-year license. You can access it at my website, mangosteen.global, and I have a 14-day no questions asked refund policy. So if you buy it and you figure out it's not really going to work for you, no problem at all. Send me an email and I will refund you. And flick me through an email at hello@mangosteen.global. If you want to understand more, I'm happy to accept Bitcoin as well for a 5% discount. So things are good. It is a really, really powerful platform. New products are going to be released over the next coming year as well that I'm really excited about. So stay tuned. And disclaimer, this channel does not provide financial advice or any advice of any kind. Everything is for general information and entertainment purposes only. It does not consider your personal objectives, financial situations, or needs. Reference to any financial products are factual only and do not constitute recommendations. You must do your own research. Any investment or trading decisions you make are entirely your own. This is entertainment only. You are listening to a random Mangosteen on the internet.